Welcome to the MUFG Global Markets FX Week Ahead podcast with Lee Hardman, Senior Currency Analyst, MUFG. It's Friday, 5th of September 2025, and joining Lee to pose some questions on the financial market themes for the week ahead is Simon Mays, Head of UK, Ireland and Switzerland Corporate Sales, FX. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Hi Lee, great to see you. It feels like the markets are back.
Yeah, no, good to see you as well, Simon.
It's obviously we've had a bit of a lull over the summer period, but it's been a fairly volatile week in the FX market. So I just wanted to, dig into your thoughts as to what you think have been the main drivers of the FX performance this week, and maybe we'll culminate on focusing on the NFP's and nonfarm payrolls, data, and dig into that a little bit at the end of it.
Yeah, like you said, Simon, we did have quite a quiet summer trading period, which led to low volatility in most of the FX kind of major pairs. But like you say, coming back this week, we've seen a clear kind of pickup in market volatility. The dollar initially at the start of this week started to strengthen. That was initially kind of driven by the sell-off that we saw at the long end of the bond markets globally, particularly in Europe and Japan. That was providing some support for the dollar, where if we look at yields at the longer end of the curve in the US, those have been kind of more stable and better anchored. And that did help to provide some support for the dollar. But like I say, that initial kind of rebound for the dollar proved to be very kind of short-lived. And really, we've seen the dollar kind of giving back all of those gains and more at the end of this week following the release of the payrolls data today. That was the second consecutive month now that we've had weak employment data for the US. And it's pretty clear that we've seen a significant slowdown in the pace of hiring over the last 3 to 4 months. I think on average now, employment growth has totaled around just under 30,000 per month over the last 3 to 4 months, which is getting to the point now where it's becoming a bigger concern for the Fed. Like Chair Powell said at Jackson Hole, downside risks to the labour market have increased, and then they need to watch that closely going forward. They're fearful that if it continues to weaken, we could get to a tipping point where unemployment starts to rise more sharply. And that's something which the Fed has to be very wary of, and is the main reason why we think today's payrolls report will cement expectations for the Fed to resume rate cuts this month. Definitely a 25 basis point cut is going to be delivered. And the question now really for markets is whether the Fed is prepared to go even bigger and deliver a 50 basis point cut, similar to what we saw in September of last year. Like our base case now is that we still think 25 basis points on balance is the most likely scenario, but you can't rule out the possibility of a bigger 50 basis point cut, which could trigger a bigger dollar sell-off as well.
And I think I saw in our latest monthly that we have penciled in about 100 basis points of cuts over the next year for the US. If they were to go 50 basis points this time, do you think that would increase the expectation to 125 basis points of cuts, or would it just be more of a front loading of what we would expect? Where do you think the bottom is going to be?
Yeah, like our view for the Fed to bring rates closer towards kind of 3%, which they think is the neutral rate, kind of based on the view that the labour market remains weak, but doesn't kind of tip it to a point where recession risks rise in the US economy. Obviously, if we were to go down that more negative route for the US economy, then the Fed would then have to look at cutting rates below neutral. So you'd have more aggressive cuts being delivered by the Fed, and most likely those would be more front loaded as well. So that's clearly the kind of worst case scenario for the dollar. But at this stage, that's not our kind of main scenario.
Yeah, okay. I guess then turning our attention away from the US and I guess away from sort of monetary policy drivers, there's been quite a bit of political uncertainty is emerging in other countries. Obviously, we've seen the latest news in the UK with Angela Rayner, but also political uncertainty in Europe and Japan, starting to drive FX as well. So what do you think are the key political events to watch out for in a week ahead? How can they impact the upcoming ECB and BOJ meetings as well?
Yeah, like you said, Simon, I think Monday is going to be an important day next week. We have kicking things off in Japan at the start of the week. The LDP members will be deciding on whether to hold an early leadership contest. Based on recent political developments, it does look like it's a finely balanced decision on whether Prime Minister Ishiba will kind of cling on to power in the week ahead. This is something I think which has been maybe preventing the yen from strengthening further than we've seen this week. Normally with US yields dropping sharply, particularly at the short end of the curve, you would expect to see dollar yen also falling more over the last kind of couple of days, but that hasn't been the case. So I think this political uncertainty is preventing the yen from strengthening further. So that vote on Monday will be important. You say if they do call an early leadership contest, then for the BOJ, that would probably make them remain kind of cautious about hiking rates. At least as we go into the autumn period, I think the earliest point that you could have a leadership contest would be sort of in early October. So we could still be in a situation where the BOJ doesn't want to resume hikes until they have more clarity over the political situation. So that could continue to hold back the yen. Having said that, though, if obviously Ishiba does cling on to power next week, an early election is not called for, then that could then open the door for the yen to see some catch-up strength next week, as dollar yen hasn't really tracked the move lower in yield spreads between the US and Japan recently. And then in terms of developments in Europe, Monday is also important. We've heard from French Prime Minister Bayrou, who has decided to call a confidence vote in his own government on Monday. And looking at the comments from most of the political leaders in France, it does look very likely that the government is going to fall again in France. And then we'd be in a similar situation to what we were in towards the end of last year as well. On that occasion, we saw President Macron nominating a new candidate to become the prime minister, and then they had to put together a new government. So we do think a similar scenario will play out, with the key kind of requirement of any new government really it will be to pass the budget for next year. On that side of things, given that doesn't look like there's any real kind of majority in Parliament right now in France to pass significant fiscal tightening, the most likely kind of outcome of any new government would be that they'll likely kind of water down plans for fiscal tightening. The budget deficit in France remains higher for longer ahead of the presidential election in 2027. While that's obviously negative for French government bonds, we don't think those political developments will be enough to trigger a sustained sell-off for the euro. We think in the short term, more important is the building expectations for policy divergence to open up between the ECB and the Fed, with the Fed likely to cut rates now. Like we said, we think it's more likely that the ECB will remain on hold now. The ECB next week when they meet, we think they'll kind of reiterate that they're happy in terms of the easing that they've done and that they feel they're kind of close to the end of their easing cycle. The upgrades to the growth and inflation forecasts next week, although fairly modest, wouldn't really provide justification for them now to cut rates further. So we don't think they'll completely rule out the possibility of further cuts, but really I think they'll kind of send a message that there's a kind of higher hurdle now for them to cut rates further. So in the very near term, it does look like we could see some policy divergence opening up there between the ECB and the Fed, and with yield spreads moving more in favor of Europe, that should see euro dollar continue to strengthen up closer towards the 120 level.
Yeah, got it. And Europe has taken the news pretty well this week. But it was interesting at the start of the week, the move lower that we saw in cable, based on talks and rumours of cabinet reshuffle, getting in different financial advisors, which potentially is going to end in more punitive tax changes when we come to the autumn budget, I think in early November. How much do you think that's going to impact sterling, in comparison to, say, euro, as we start to head into the autumn budget?
Yeah, look, we do think this is going to remain a something which continues to kind of weigh on pound performance, particularly against the euro. So we can see euro sterling moving up to the high kind of 80s as we go into the autumn period, when there's still a number of months now until the government is scheduling to hold their autumn statement. So I think over that period, it's going to be very important for the government here in the UK to try and provide some reassurance to gilt holders that they're willing to take the necessary measures to restore confidence. As we know, that with yields continuing to move higher, there's putting more pressure on the government to increase their plans for fiscal tightening. So to us, that's definitely going to remain a kind of weight on pound performance. It does increase the risk that at some point you could see another kind of sharper sell-off for the pound. But it's still not our kind of base case scenario at this point that we're going to see kind of a repeat of what happened back in the autumn of 2022 when the Liz Truss government was brought down. But you certainly see some kind of similarities to that period, which would sort of support our view that the pound can continue to underperform against the euro as we kind of head into year end.
Yeah, thank you. I think there's going to be lots to focus on in the next few weeks, that's for sure. Thanks for your time.
Thanks, everyone.
Thank you for listening to this MUFG Global Markets podcast. Please rate, review, and subscribe to our podcast. Contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research team.